The new 8.9% unemployment rate certainly doesn't present the complete picture. It can be broken down into three parts: the good, the bad, and the ugly. And Deirdre Bolton from Bloomberg Television is here to explain. Great to have you with us, Deirdre.
Hi, Rebecca.
Let's start with the good.
Yeah, that's the best place to start, right?
8.9% in this country. Why is that a positive?
That's a positive because, first of all, it's lower than last month. So already that's a great sign, right? But it's also the third consecutive month lower. So that's good as well. Worth noting, the lowest level since April 2009. So that's almost a 2-year low. So a lot of people cheering with that headline figure.
And psychologically, there can be a benefit to that as well. We feel better, we spend more, the economy starts getting better in itself. Seth mentioned some of the industries that are hiring right now. Across the board, really, this report showed growth. Are these going to be the industries that take us forward into the future?
Not so sure about that, but the reason that a lot of people took a lot of cheer from this figure, you do have construction right here, of course, manufacturing as well. Services have been strong all along, but construction, I mean, you know, we've come out of such a hard space with the housing sector that a lot of people say, okay, if this indicates a sign of life there, that could be a really strong underpinning for the recovery.
For future growth. Yeah. When it comes, however, to the negatives in the report, you say that 192,000 addition wasn't enough.
It's not enough. I mean, it's great. It's better than zero, which we had, or negative growth, which we saw in previous months. But 192,000 still really indicates slow and steady job growth. You have to stay at this level for 12 months just to get the unemployment level down to 8%. Even the Fed chairman, Ben Bernanke, said, look, we're in it for a long haul. That's not a direct quote, but that's what he meant, slow and steady growth until we see a normal job situation. Also with this February figure, this 192,000, you had a lot of people expecting more job growth. You remember that huge snowstorm that we had? It hit pretty much all of the country in January. So there were a lot of businesses who slowed down hiring in January. There were a lot of people who thought, okay, once the snow is gone, businesses are going to hire again, and so many people expecting that number to be even higher.
Right, an even bigger infusion of jobs they thought could be the case, but it wasn't so. Another thing that we learned in this report is what's happening to our paychecks. And the reality is they're not rising, but other costs like gasoline and food prices are. And that could be an issue going forward.
That's exactly right, and it's going to be an issue for you and I. It's also going to be an issue for businesses. But if you just think about us, if our pay stays the same, but we have to pay more for food, we have to pay more for gasoline. Remember July 2008, if you were doing a lot of road trips, you were paying more than $4 a gallon every time you went to the service station. So that becomes sort of an indirect tax, if you like. On the business side, it means you have to pay more. If you're the CEO of a company, you have to pay more to ship your goods. You have to pay more for electricity to run your factories. And maybe if you're paying more for energy, you're not going to hire as many people.
Deirdre, a number of economists are saying this is the turnaround. This is the report that sparks the upside growth in the future. What do you think?
Well, it seems as if you can't go forward without having a strong job situation, right? I mean, as many people have said, this is the #1 thing that even the Fed is waiting for before it adjusts monetary policy and makes sort of larger decisions that affect us all. Everybody looking for signs of life in the jobs picture.
And we're seeing some of them, but we need to see that momentum continue.
Continue for the next 12 months. That would be ideal.
At least the next 12 months. Deirdre, we so appreciate you being with us.
Thanks, Rebecca.
Have a great weekend.
Thanks.
Now here's Russ.
Okay, Rebecca, thank you. While there is some good news on the jobs front, the American economy is feeling the impact of the chaos in Libya. The price of gas is up more than 20 cents in just the past week, and a barrel of oil is now just over $104 a barrel. Joining us to talk about how the Middle East crisis is affecting your pocketbook is Eric Schoenberg, the editor-in-chief of CBS Moneywatch.com. Eric, good morning to you.
Hi, Russ.
20 cents in the past week. Pretty dramatic. Is this all about Libya?
Well, a lot of it is about Libya. Libya, before the crisis, pumped 1.5 million barrels of oil a day. That's not peanuts. But, Russ, what it's really about is fear. Fear that this will spread to other oil-producing countries like Iran, Iraq, and especially Saudi Arabia.
I see. Let's stick with Libya just for a moment. If the crisis in Libya does continue for a few more weeks, will the prices continue to rise?
Well, prices of gasoline are going to rise anyway because they always rise every season as we get close to the summer peak driving season. But as long as the crisis is contained to Libya, I don't think we'll get too much above the peak that we hit in 2008, which was over $4
I see. So no $5 a gallon gas out there you don't see it.
As long as we keep it to Libya, that'll be okay.
Okay. There is talk of President Obama tapping the strategic oil reserves. Would that help the situation?
It would help a little. When we've done this in the past, it's only affected prices at the pump by a couple of cents.
Airfares, anybody who's traveled and tried to book a flight knows that airfares are going through the roof. Prices have been raised 6 times because of jet fuel. Is that going to continue?
It'll continue, I think. But remember, airlines are always striking a balance between high ticket fares so they can get the most revenue, and keeping the planes full. If they start to fly planes that are half empty because people are staying away from airfares because they're too high, then those fares will come down.
I see. Now, when you look at the destinations out there where airfares may be lower and in destinations where airfares may be higher, what are you seeing?
Well, I think what you need to remember is that as long as you stay flexible, you can beat these higher airfares. So if you want to go to San Diego, say, but it's cheaper to go to LA, go there, rent a car and drive there. You could save more than the cost of the rental.
You know, every time this comes up, every time the airlines raise prices, you always ask yourself, a lot of people ask the question, is this just an excuse, what's going on in the Middle East, to raise prices? What's the answer to that?
Well, look, they're not making it up. They really are hit by fuel prices. They account for 30% of an airline's cost. But airlines are in business to make money, and they'll do what the market will bear, and they'll raise prices until people stop flying.
And as you said, this summer we talk about the gas at the pump over the summer. It's going to get worse, right? This is not going to get any better.
It's probably going to get. We will probably test that high that we saw in July of 2008, $4.11 a gallon.
All right, you touched on this a moment ago, Eric. If the crisis in the Middle East continues to spread, you say we're not going to see $5 gas. What will we see down the road?
Well, you know, I think that we're going to see $4. We should just get used to the idea that we're going to see $4 a gallon. Yeah. What I think we'll see in the Middle East is, remember, we have a population there with a young population and a lot of countries that have autocratic governments. That is not going to change. These people know how to use the internet, these young people, and the governments are going to have to adapt to the fact that you can't put the democracy genie back in the bottle.
When you look at how Americans are using fuel today and with these prices going up, do you see Americans dialing back, or do you think this is just something that we have to do? $4 gas, hey, that's just the price of admission.
Well, here's a data point for you. The sales of hybrid cars, electric gas hybrid cars, are up 39% in February. That's an indication that in one way we're changing our habits.
I see. Okay. Eric Schoenberg, as always, thanks a lot.
It's my pleasure.
We appreciate it.